Coming up, we have your April 2020 Las Vegas real estate market update, and we'll be discussing the impacts of the coronavirus. Hey, I'm Steve.
And I'm Kristen.
We are the Thomas Group with Love Local Real Estate, your local Henderson and Las Vegas realtors, here to bring you your April 2020 Las Vegas real estate market update and impact on the coronavirus. But before we get into the numbers, just to give you guys a little teaser on what we've got coming up, we have invited one of our loan officers, Cody Tyson from Supreme Lending, to come and join us on the phone, and we're going to ask him about some of the effects of the mortgage industry that you might have heard about on the news. We're also going to give you a couple of tips on what to actually look out for in the whole Vegas Valley and in maybe where you live as well, to actually be able to determine if real estate prices in your area are actually going to be declining. Let's get into it.
Halfway through March, that's when the casinos closed, when our governor issued, the first order to shut a lot of businesses, non-essential businesses. So this data that we're going to be looking at today is going to be halfway pre-coronavirus craziness and halfway post. So just keep that in mind, as we're looking at the data today, right? Yeah,
absolutely.
Our median sales price actually this month saw an increase up to $319,000. This is higher than our, pre-2008. That was up 0.9% from last month and up 6.3% from last year.
I think this is fascinating, and it really shows you the strength of the Las Vegas real estate market prior to the coronavirus and also during. Because don't forget, all of these closed sales that happened in the month of March, those people had to prove their income. So these weren't people that were, previously working as a bartender or, working in a hotel or something here on the Strip or, in the casinos. These are people that had other jobs. So that we might now call essential workers. This really surprised me. That how strong it's been. But like you say, we are pre-corona and kind of into the corona. So I think next month is going to be like the real tell as to where we're going with that.
I would absolutely agree. And then along the same line, the units sold for single family homes is up as well. So it's up 11.6% from the previous month, which is what we'd expect going into, the springtime season. And it's also up 5.2% from the same time last year, number of sales. So again, just shows how strong, those first 2 weeks were, and that, things are continuing to move along for people that are essential workers that, are still working.
I think a lot of, when this pandemic hit, a lot of people thought everything's over, real estate sales are going to stop. Vegas is so heavily dependent on tourism and stuff that no one's going to be buying, but obviously they were last month. But let's see what happens.
There's no doubt that we're affected, but so our new listings are actually up 11.3% from the previous month, which is great, but they were down 18.2% from the previous year. So that's kind of what we've been seeing. Overall, 2019, we took on a lot more listings than we'd been trending to be taken in 2020. Like we've talked about in our previous videos, people are staying in their homes for longer. That information is pretty standard, right?
Yeah, but I think that decrease there over last year, that's the effect of the coronavirus right there, because we're heading into spring. I mean, we're in spring right now. We should be having a lot more listings coming on the market, right? But we've got 20% less. So people are obviously nervous. A lot of people don't know what's going to happen. This is the direct effect we're seeing there. Lack of inventory.
So for available single family homes, the availability of inventory was up 34.1% from last month. So there's a lot more homes available on the market right now than there were the previous month, but that is down 19.8% from the same time last year. I also was looking at the weekly numbers and what are we seeing weekly, and we are definitely seeing the inventory. That is one thing that is increasing both in single family homes and in townhomes from week to week. You can just see that number going up.
So what does that mean for a buyer?
Well, it's good for a buyer. It means that you're going to have more options to pick from. The fact that there's more houses out there and we're seeing that there's less demand. You're definitely going to be able to ask for concessions. We've been hearing from, a lot of our fellow agents that, especially in, the lower price ranges, the sellers are helping to pay with closing costs because they want to get this deal closed. Like, they've got people that are selling right now, they've got somewhere to be.
They have to sell.
They're selling for a reason. So if you're thinking, if you need to buy right now and you're one of the lucky people, that can, there's definitely opportunity out there for you.
Absolutely. One factor that I know that you'd like to talk about shortly is the pending sales. Right. The pending sales that were happening through the end of March are now going to be closing in April. And what's been happening with the pending sales?
Yeah, with the pending sales, like Steve said, they are actually down 30%. And what this means is we can look at the pending sales and think the majority of people are, using a loan to buy their home. So their escrow is normally going to be 30 days. The houses that we're seeing pending at the end of March, those are the ones that are going to be closing coming up in this month of April. So the fact that our pending sales are down 30%, and we look, they're down from the previous month, but they're also down from the previous year. There are going to be less sales happening. I mean, I think it's pretty clear to say that. We do have a chunk of buyers that aren't able to buy right now.
The cash buyers have not completely disappeared in this market, but they've gone down a heck of a lot because the stock market's been tanking.
So our months of availability is creeping up a little bit too. It's at 2.1 months.
Still heavily favoring the seller, but what you guys need to pay attention to, that is actually very, very community specific. So not in all the communities right now is it still a seller's market. Some it's actually a buyer's market. So depending on where you're shopping and looking, make sure you find out from your agent whether it's a buyer's or a seller's market in your area so that you know how to structure your offers.
Right. Yeah, that's important. So that was a little look at single family homes. Let's have a quick look at condos and townhomes, and they're following all the same trends. So the median sales price was $185,500. Now that's up 6% just from last month, which is pretty crazy. And that's up 11.4% from last year. I mean, people are just wanting to get into an affordable home that they own. And that's why there's the extra upward price pressure on those condos and townhomes. There were 714 condo and townhome sales last month. That's up 15.5% from last month, which again, considering that half of that month, a large portion of our population was out of work, that's pretty strong sales.
And I think not only the population, but there was a huge amount of buyers that were currently buying now can't close on their loan because they're now furloughed and laid off.
Exactly.
But still,
the actual closings for them to be up that much.
We still sold more homes than we did this time last year, which to me just it blows my mind. This coronavirus really sucks. We having such a good year.
Yeah, the economy was doing
look, it's everything's is what it is, but we had a really strong market.
New listings for condos and townhomes were up a little bit, 2.2% from last month, and the new listings again were down 19.4% from the same time last year. Like we mentioned before, we were just trending that fewer people were moving out of their homes. In general this year, we've been seeing fewer listings. For the available inventory, again, that was up 34.1% from last month. So there's a lot more homes on the market. And really quick as well, Steve, as well, for the pending sales for condos and townhomes is looking the same. So we're definitely seeing right now a lot fewer pending sales, which is going to translate next month when we see you. We're probably going to be saying that the actual number of sales is down quite a bit.
And I think that dependent on how long that might progress, because typically we're in the hottest period of the year. We should be in the hottest sales period of the whole year right now. We might start seeing some prices dropping, you guys. More inventory, lack of now buyers that are coming into the market. It looks like, just from what we're looking at from past month, pending sales down, so that we can assume that there's going to be less sales. More homes.
Yeah, more people are listing.
More people listing, so the prices could go down. There's a couple of pointers that we wanted to get to that we teased you about at the beginning of our video. The one thing that we'd like to talk about is mortgage-backed securities. Now, you might have heard of these in the news and read about them, and you're wondering how this actually is going to affect you as a potential buyer in this market, and maybe how does it affect the real estate market overall. We've invited our loan officer Cody Tyson from Supreme Lending to actually join us on a phone and answer a few of those questions for you. So here we are. Cody, what do you think about the mortgage-backed securities?
Yeah, Steve, it's been a wild ride this past month. For those of you that don't know, mortgage-backed security prices are actually what drives mortgage interest rates. The higher the price on mortgage-backed securities, the lower interest rates to the consumer. And so when you hear the media talking about the federal funds rate, or the Fed just dropped the rate to zero, all of that stuff, that matters, but it really doesn't have a direct impact on the interest rate you see as a homeowner. What matters is the price on mortgage-backed securities, and that's the direct correlator to mortgage rates. Going into the coronavirus and everything, rates were already dropping pretty rapidly, and then the Fed stepped in, kind of trying to bail out financial industry before anything got too bad. They started buying up mortgage-backed securities at record levels, and this should have driven rates down even lower, down below 3%. What it did was it put lenders in a really tough spot, because lenders hedge their market positions. They buy insurance for themselves effectively. And so when the mortgage-backed securities prices skyrocketed like that due to a new huge buyer in the Fed, lenders lost a lot of money, and they've since kind of cleaned that up, and we're seeing things flatten out a little bit, thank goodness.
So what do you think that effect could have on, the modern day buyer?
The way different lenders are reacting to this, it varies by size of the lender. There's a lot of factors, but some lenders we've seen just completely price themselves out of the market on purpose, for example, because they can't handle the volume. Either operationally, they don't have the people, or they don't have the money to finance more loans. And then we're also seeing lenders eliminate programs, change requirements. So really important for consumers right now to compare, talk to more than one lender. Don't just go with the first one in front of you, because the down payment, interest rate, and then the programs that are going to be available are going to vary a lot more now than ever.
Thank you so much for taking the time out of the day, Cody, to share all of this information. If anyone is looking at buying a home this year, Cody is one of the best, if not the best, lender that we've worked with in the whole of the valley. And of course, if you're looking at refinancing as well, then I'm sure you'd love to help out with that, right, Cody?
Yeah, absolutely. Yep, we can help with either a purchase or a refinance. I really appreciate it, Steve and Kristen. You guys are awesome. Thank you.
Awesome. Thanks, Cody.
Speak soon.
Thanks.
Now, I know, Kristen, a lot of buyers, homeowners reaching out and asking us if prices are going to drop, and we're anticipating maybe they're going to drop just because of supply-demand cause effect issue. But one thing for you as a homeowner, and that one thing we'll try and do as your realtors is keep you updated on, are short sales. Short sales could really affect the value in your community.
Short sale happens when homeowner is no longer able to pay their mortgage every month. And so instead of going into a foreclosure where the bank takes possession of the home and has to go through all these legal proceedings and sell it that way, a homeowner can go through a process called a short sale. And what's going to happen is the bank will agree to sell a house for a particular price and potentially take a small loss on it, because they know it's going to save them the headache of doing the foreclosure in the long run. So it's basically one step before foreclosure.
So what you're going to want to keep an eye out, you guys, because again, we don't know how long this is going to last, how much, support this, and stimulus that the government are going to give to the public, help everyone keep making their rent payments, mortgage payments when they're out of work and stuff, is you're going to want to keep your eye out on the short sales. Because when the short sales start cropping up, if, for example, in your community, the amount of sales are actually dictated by short sales, that then becomes the market. And an appraiser in the community then looks at those values of those short sales, and your home now immediately becomes almost the same value as those. And like Kristen said, they're typically sold less than what they're worth. If you're thinking about selling, you're going to really want to keep an eye out on that. But if you're thinking about buying, keep an eye on that as well, because you're going to be in a totally different position. Right. We've been actually tracking the short sales and foreclosures since last year. As you'll be able to see on the graph, the short sales have been creeping up, and then in December last year, they just dramatically increased, and they've been increasing by between about 15 and 20% every month of 2020 so far. We're anticipating, and I hope it doesn't get that way, but unfortunately a lot of people aren't going to be able to continue making their mortgage payments because of this. Even when the government switches the economy back on. Las Vegas is such a heavily tourist dependent city.
Will we just jump right back into everything? Probably not. Well, are we going to slowly move back into like our normal, that's more likely,
way of life? But that's going to take time. Casinos in China, they're making everybody wear face masks, and where at the baccarat tables would have been full of maybe 10 people, they're only allowing a maximum of 4. Right. Maybe that sort of thing's going to happen in Vegas. It's not going to be just as it was immediately. Right. We think we will rebound in a strong way eventually, but exactly when that's going to come, who knows? Right. So keep your eye out on short sales, you guys, and we'll continue to do that as well and update you in the market info. As always, we thank you so much for joining us. If you do enjoy our videos and our market updates, we'd really appreciate it if you subscribe to our channel. If you like our videos, give them a thumbs up. We really appreciate that. And if you have any questions, please don't hesitate to leave us a message in the comments, or you can reach out to us via our website, thethomasgrouplv.com. But for today, I'm Steve.
I'm Kristen. Stay healthy, everyone.
Take care.
We'll see you next time.
Bye-bye.